I'm Jessica Lorah with Colorado Mountain College. There are some basic fundamentals of small business financial management that are important to every entrepreneur, anyone thinking about starting a small business. First, you need to consider your initial financing options. Startup financing is really what takes your idea and turns it into an opportunity. There are lots of areas to explore when you're interested in startup financing. First of all, you should consider your own assets. What do you have that you can sell for cash? Do you have a second home, a timeshare, ATVs? Anything that you have that you can sell and use the cash to launch your own business is one of the smartest ways to get started. You can also consider borrowing from the equity in your home. This is going to be one of the cheapest ways to get cash for your business. Beyond that, though, with today's economic climate, we all need to think about alternatives. Even with the credit crisis, banks are a good place to start, especially if you have a good history with that organization. Go in, talk to them about what you need, of course bringing with you a well-written and well-planned business plan. Second, you want to think about borrowing from yourself. If you have a 401k or other retirement assets, you can contact your plan administrator and see what kinds of options are available to you. This is another low-cost way to finance your business. Typically, we see that entrepreneurs can borrow roughly 30% of initial startup costs from their retirement plans. You can try the tried and true method of borrowing from friends and family. Be careful with these. Keep it as a loan. Remember, you don't want to share ownership in your business, because when you share ownership, you share managerial decision making as well. So keep those things as a loan. Last but not least, you can try different options online. You can borrow from peer-to-peer lending sites. Essentially with those, you're borrowing from strangers online, people interested in making a good return on their investment. So these will cost you a little bit more, but given the credit crisis right now, it is a good option. Before you start making money, you've got to figure out how you're going to get paid. You need to think about how you're going to accept payments, if you're going to establish a payment and credit terms policy, and where you're going to do your banking. As a new small business, one of the first things you want to do is head down to your local lender and establish a commercial bank account. After you've done that, and hopefully you've attached a line of credit, you want to set up your bookkeeping system. You need to be able to track where your money's coming from and where it needs to go. You also need to think about how you're going to accept different forms of payment. Cash is easy. We all like cash. It spends quickly and you can use it to pay bills as soon as they come due. But these days, you need to think about it broadening how customers can pay you for your services. Often customers prefer to make payments by check, but increasingly credit cards and debit cards are a must. They're a cost of doing business in today's global economic climate. You have to think about, even though these services cost you something as a small business, they offer you flexibility and they offer your customers flexibility in how they can pay you for your service. You also need to think about what your payment terms policy is going to be. Are you going to secure deposits before you start work? Should you set up a payment progress plan so that you limit your financial exposure for the work and for the services that you're providing? So how do you track your money once you get it into your business? Where does it go? How do you know who you owe money to and who owes money to you? Well, there are three primary financial statements that you need to be savvy about before you get too deep into your entrepreneurial endeavor. Those financial statements are the balance sheet, the income statement, and your statement of cash flows. Now, a balance sheet is going to list for you the financial well-being of your organization at a set point in time. It spells out your assets, which is anything you owe or anything that you own or anything that is owed to you, and all of your liabilities and your owner's equity within the business. Liabilities are things that you owe to other people. Owner's equity is that initial investment that you've made in your business and any cash that you've left there to help the business grow. You're also going to need to know how to interpret an income statement. An income statement is a good tool that you can use to tell you, are you profitable? Are you making money within your business? You want to see that your income obviously far exceeds your expenses, and your profit and loss statement or your income statement is the best way to do that. But by far, for a small business owner, the statement of cash flows is the most important financial document that you can use. The statement of cash flows really pares down to its core how financially healthy your business is. Do you have enough cash coming in so that you can pay the bills that are coming due when they need to be paid? It is very possible to show profitability on an income statement, but run out of cash and not be able to continue operations. So you need to make yourself savvy and informed about how these documents work and what they tell you about the long-term financial well-being of your business. Financial reports like the balance sheet, the income statement, and the statement of cash flows don't generate themselves. What you need as a small business owner is an investment in a sound bookkeeping system. You either need to do the accounting yourself or hire a bookkeeper in coordination with a CPA to make sure that you are capturing all of the vital information that you need about your financial well-being. Choosing accounting software isn't easy. There are lots of products out there on the market. You have to think about what kinds of softwares are your competitors using. Hopefully there's been some research done and they're using a product that fits your industry and the size of your business. You need to think about your time. You've got a lot of other demands on things that you need to do as a new small business owner. Are you going to have the time and the expertise to enter data into an accounting software program yourself? There are lots of options out there, but you need to know the fundamentals of accounting. You can look at off-the-shelf options. They're not very expensive. They're going to provide you with, they're going to meet your needs for the basic accounting and bookkeeping services for a small business. But you need to ask the right questions. There are lots of online resources that can guide you in this effort, in finding what you need. If you choose not to go this route and not to buy accounting software, a bookkeeper is a great option. Bookkeepers locally specialize in certain industries. You can ask for referrals, meet with that person, make sure it's someone who you want to have a long-term relationship with, and be sure that you call references so that you know this is someone whose expertise and insight is going to be valuable to you. And the last major issue that you need to think about and be aware of before you launch your entrepreneurial endeavor is small business taxes. There are a lot of forms of taxes, but it's really a part of doing business. So you need to think about income taxes. You need to think about employment taxes. You need to think about sales taxes. In some areas, use taxes, and in other areas, excise taxes. Your certified public accountant is really going to be your best friend as you look to launch your entrepreneurial endeavor, because he or she can help you identify what kinds of taxes you need to be aware of and what kinds of payment structures and timing structures you need to also take in mind. Even though you may use a casual approach to record keeping for your personal taxes, you can't do that in business. In business, there are special restrictions on how you maintain and keep those records. Even if it's a valid business deduction, if you don't have the records that support it, you can't claim that deduction. There are lots of ways that you can save on taxes for your small business. Probably the most important is how you legally structure your business. So in summary, probably the top 5 most important things for a small business owner to think about in small business financial management are that initial in-source of cash for launching your business, the basics of money management, how do you get paid, what kinds of financial statements do you need to know about and what do they tell you about the financial health of your business. You need to know about bookkeeping, who your bookkeeping software partner is or who your bookkeeper is, and last but not least, small business taxes. Not everyone's favorite subject, but arguably a very important topic for small business owners.